So when you hear that the president's 2019 budget, or not 2019 budget, but when you hear that the president's 2023 budget is a 30% increase over 2019 spending, then you see that policy is not going to get us out of this. When you have California sending out inflation protection as paychecks to people, like stimulus checks, policy is not going to get us out of this.
I mean, so I get what you're saying here, and try again. We're a stock and finance, and I want to kind of move back into stock and finance here. You're going off a historical perspective based on what happened in the 1970s and how we had to get out of it in the early 80s via interest rates hikes, and then slowly work our way back to a normal inflationary percentage. And you're saying the same thing that we're seeing now is instead of having austerity, we're increasing our spending and we're not hiking rates fast enough. So you see a more bearish negative side going forward, correct?
I see taxes increasing, and that's what happened at the beginning of the 1970s 1970s hyperinflation. They had a 13% increase in taxes. So taxes don't help inflation. They don't. People think, oh, just raise the tax. Well, no, that actually makes the prices go higher. How does raising taxes on anybody, even if it is somebody making over $100,000 a year, on any business or anything like that, it doesn't help. And I'm not trying to be political. What I'm trying to say is I'm trying to paint the picture of where we could possibly be going so investors could be ready. And it doesn't look good right now. They don't seem to really know what they're doing. In the 1980s, we had to cut spending and cut taxes, and we had to cut regulation on the supply chain. We wound up having the most efficient supply chain in the world by 1985, and that's how we normalized inflation. I don't see that happening anytime soon, not right now at least. I don't see it. And then when you have people, you can't even put a name to the economic crisis that we're in and starting in right now, and that we can inevitably have. I don't know that this is going to be as bad as 2007, 2008. I'm just saying, like, the end of this is starting to not look good to me, especially when you have people saying that it's not a recession.
I get you.
So what on a definition of what's going on?
So what would you recommend someone invest in? Do you recommend they just sit in cash, wait for a bottom, or do you recommend they actually buy something here, or maybe they do puts? Or
I would start raising cash. If you've got stocks that you got at good prices, then fine, you can hold them. You'll be fine in the long run with good companies. But, I just start raising some cash, start putting in, whatever you can afford every paycheck, put it into your brokerage account and sit and wait. No, I've said this 1,000 times, numbers don't lie. So you could still go into a company and you see something that's been driven down that doesn't necessarily, deserve it, then fine. I would still be safe right now. I would think I'm safe buying Amazon right now. Me and you talked about this before the show, that Amazon's still a good buy, despite the economy being bad. Amazon and Apple seem to be in their own universe. They operate on a completely different level, in a completely different world than everybody else. And same thing with Alphabet and Amazon. So, I mean, I'm not going to shy away from putting money into things that look like they're great to me, but having some cash aside is going to be a good deal if deflation sets in anytime soon.
Gotcha.
This is an era of economic ignorance. We're going to have to come back down to reality. After the Great Depression, everybody was Keynesian, everybody in economics, everybody loved the government spending. Then the 1970s came and everybody turned to Hayek. And if you don't know what I'm talking about, Google Hayek versus Keynes. It'll explain the entire thing. Look up Russ Roberts. He's got a podcast called Econ Talk. And it explains the entire thing of Keynes and Hayek and how we went back and forth between the two different kinds of ideas of how the economy should be run. In the 20th century, we go back and forth. And it's just like this kind of the stock market. We'll swing from one person to the next person. We'll be Hayekian again. and probably 3 years from now.
I tell you what, man, I'm not as smart as you, and I don't know as much as you about all that kind of stuff. And I feel like that's why I relate more to the everyday person. So what I would say is, yes, Amazon is a good deal. I think Amazon is great because we talked before the show, but we talked about a different approach. I wasn't really talking about how they're just doing everything different, which they are. I think Apple's also a good buy right now because they continue to have good reports, and I don't see people not needing Macs or phones or anything like that going forward. And the services part of Apple continues to grow, and that's what I like about it. Let me transition to Amazon since you brought it up, and I want to transition to this. I want to bring up the fact that Amazon's ad revenue has grown 18% year over year. And that now their percentage of what they of the ad market has also grown. They now command 14.6% of the U.S. digital ad market. That is third place. Third, Amazon. They're not seen as an ad company, but yet they are third as far as the ad market in the United States today. So they are an ad company, and ads is easy money for a company. Google makes it hand over fist. They're number one. They've always been number one. Facebook is number two, and Amazon is sitting there right in third place saying, hey, we're on our way up. We're taking more and more of this market share because people are placing ads on our systems.
And Apple said that they expect profits to accelerate through the second half of this year.
I don't blame them. I mean, I see that too.
Listen, you got a Caterpillar's earnings call. They said we're still dealing with inflationary environment. We have not seen a decrease from our suppliers as a result of the commodity price reductions. We had Mark Zuckerberg talking about the end of this year and being fairly pessimistic. We had the RH CEO talking about how bad things are. We've heard so many CEOs come on these conference calls and say, look, Caterpillar's manufacturing costs increased by $966 million year over year. And then you get Tim Cook saying, what's a recession?
I would love to see
He's
what
the only person that can say what's a recession, and I think that's because he runs a great company. That's just amazing. It doesn't
look at their cash.
It's crazy.
They got enough cash on hand to run that business without making a single profit for I don't know how many years, man. They're just sitting on a pile of cash.
Yeah. I want to make a correction. Speaking of pile of cash, I had been looking at Apple's, and I got them crisscross last week. I said Meta had like $95 billion in cash. They have $46 billion. So still quite the mountain there, but I was wrong on the number. So correction made. But
here's I want to talk about Amazon. So Amazon is not an ad company. That's not how they sell themselves, right? They sell themselves because they sell products. They also have Prime Video. They sell food with Whole Foods markets. They have all these places now, and who would have thought, oh yeah, why don't we just start placing ads everywhere?
Yeah.
I think the rise of Prime Video is really what's adding to their rise of their ad market.
And Amazon Web Video. And
Yeah.
Amazon Web Services. That's becoming king of the internet right now.
It is.
A lot of people use it. A lot of companies are using the AWS system. So.
And there's not much competition to it. What are you going to do? Google, Microsoft, or Amazon?
Yeah. I mean, what we use GoDaddy, is that what we use? But
we use GoDaddy. And if you go onto our website, just know we really haven't touched it in about a little over a year. We don't do much with it. We're on social media. That's just there as a placeholder because if you have a business and you're on social media, you got to have a website.
Let me tie up what I was saying about this just real quick, because the New York mayor, Eric Adams, a couple of months ago came out and said, we are in a financial crisis like you can never imagine, which that's pretty extreme. We are nowhere near 2007 yet. Might happen. We might be in a financial crisis. This is not a financial crisis yet. This is so far just a recession in the business cycle, but 9.2% unemployment. Who knows where we're going to go from here. But then after that, when he was asked about it, he said the president will make a determination of the official title of where we are. That's the president, and I will follow the president.
I would have felt better if he said, I'll follow the Fed Reserve chairman or chairperson. I would have felt better of that statement than the president. Because not all presidents are economic strategists and smart men. They're leaders, right? Smart men and women. They are leaders. That's why they are elected at position, because they come across as leader and leadership qualities. They're not necessarily elected at position because they have a financial degree from Dartmouth and Brown, and they've been in the stock market for an investment banking for years.
I, for the most part, haven't liked any president that I've seen in my entire lifetime. So don't take this too personally when I say he's awful. if you are Democrat or left leaning, I'm not trying to come after you here. I'm simply saying what I see, and I'm not trying to hammer on Biden too much. I mean, the tariffs that were passed and in my opinion are hurting the supply chain. They were passed under Trump. So let's be as bipartisan here as we can possibly be. It's everybody's fault.
There you go. I like that. And on that note, let's move into final thoughts.
No, let me talk about Robinhood just real quick.
You really have to talk about, do you have to get this in? All right, go ahead.
Yes,
Talk about Robinhood.
I'll speed it up. Robinhood came out with their earnings a day early for some reason, and they did their conference call a day early, even though they didn't update their app for it. So and if you want some pretty good entertainment, they were taking questions as they do, and I kind of applaud this from them, but they take questions from retail customers or retail investors. And if you want some entertainment, I just suggest open up that app and look at the questions that were asked, because some of them you got $6 billion on the balance sheet. What do you plan on acquiring with it? Or when do you plan on doing buybacks? Well, they've got $17 billion in short-term debt that's due by the end of the year. So why would they use their $6 billion to do anything? However, because I think this company is run by deranged psychopaths, they announced that they're looking for a company to acquire.
Who are they looking to acquire? GameStop?
They didn't announce, they didn't say who, but they said that we're looking for somebody to acquire because we think that, if we make some acquisitions, we can increase our innovation. They just cut 23% of their workforce yesterday. And you know how people found out they lost their jobs? Through a Slack message and emails. I got so angry on Twitter when I found out I had some choice words on there. But so Jason Warnick, Robinhood's chief financial officer, reiterated on Tuesday's call that instead of being a target to be acquired by somebody like Charles Schwab that might be responsible, they will continue as a standalone independent company. And they've got a lot of momentum on the product side, he said. To the contrary of being acquired, we actually think that we should be looking more aggressively at opportunities to acquire other companies. Monthly active users fell to 14 million, down 34% from a year earlier. Revenue fell 44% to $318 million. Revenue tied to customers' trading activity has dropped 55% in the last quarter to $202 million. And who called this, Dave? It was me. I said it was going to happen.
But Robin is actually up on that earnings report because it was better than what was thought.
Yeah, but they're down 70% for the year. Jesus, it's what a terrible company. I think Vlad Tenev, I think he's deranged, and in my opinion, I'm just gonna make I'm gonna make a prediction right here. Give it 5 years, there will be a WeWork style documentary on this guy.
Probably, yep. I can see that. Get his own movie.
73.04% decrease from the year. What did IPO at? $38. It's down to $10.20 right now. I can't stand this company anymore. You fire people through Slack and through an email? Are you serious?
That's a little cold, but I also understand that if you have a large company and you're cutting 20% of your workforce, you really can't have an HR meeting with every single person one-on-one.
You can have at least a supervisor. I'm sure they have, I don't know. I can't stand them. I think they're deranged, and I think they believe they're better than they are. They've got a really great product, which is so sad because it's just a terrible company. Awful.
They changed the trade-in market for everybody. by now everybody has free stock trades at most companies, and so they did change the market in that regard. You have to give them that much credit that they did make big changes across the board. So
they forced it. They did for sure. But now everybody else is doing what they do, but they do it better.
Exactly. All right, final thought.
You could just keep looking for value. I'm not going to tell you to not buy stocks. I'm just going to tell you to not buy overvalued stocks. So don't buy anything with a price to sales over 5. Don't buy anything with a price to book over 5. You know, price to earnings ratios don't tell the whole story. So if you've got a company that's been beaten down by international lockdowns and stuff, the price to earnings may look a little higher than what they should be. They may make the company look more expensive than what it actually is. So use the price to sales, use the price to books. Put your money where the value is, and we've been pretty pessimistic here, but don't let those emotions control what you do with your money. I do think it's a good idea to always have cash on the side. Me personally, I'm building a little bank for myself on the side as well, because I don't think that we're out of the woods. Some inflation numbers have started to turn over, but this isn't it, and who knows what lies on the other side with deflation and how hard we're going to fall.
There you go, man. I will say that my final thought, I am definitely staying away from Airbus. I don't like the headlines there. I don't like the news. I see more headwinds for Airbus going forward. Definitely staying away from that one. I did take profit off the table last 2 days, but I'm looking to reinvest it. I'm looking for opportunities, and I always keep my watch list open. As always, Riot has been a perfect channeling for me. So much so that I know a certain 16-year-old that made 14% in one day from Monday to Tuesday because they listened to me and they did what I said and they made money. And that's what I want for all of you guys. Take what you've heard here today, use it, come up with a plan for investing for the next week. Maybe make some day trades, maybe make some channel trades, maybe just make some investments. Those are 3 different things.
Yeah.
And look into it and find what you need to find.
I haven't sold a single one of my core holdings. I've traded good companies like FedEx, AIG, quite a few actually I was looking at today. I have a whole page of trades that I made off of tradable bottoms, and that's what's kept me positive for the year, because I'm now positive for the year, which is I'm happy with that, with the way the S&P has performed this year, that I'm positive. So, but not a single one of my core holdings, because I bought value and I'm confident with them. Some of those I will hold until the day I'm about to die. So I wouldn't be too negative. The entire American economy, the people that run it, we are very, very resilient, and I'm still betting on America. I just don't think for the medium term that we are through this yet.
There you go, man. We'll end it on that note. We thank you for listening. As always, here at Chinchilla Pick, we hope you've been entertaining, educational, and uplifting, because we want everyone to make money. Have a good night.
Have a good night.